Stocks try to claw their way back after a Wednesday scare. Let's talk to George Cipollone of Penn Mutual Asset Management, and I'm Lisa Bernhard with Reuters. George, Wall Street's volatility index spiked yesterday after the Fed signaled just 2 rate cuts in 2025. With valuations so high, are investors looking for a reason to sell?
So obviously, yesterday was a historic Fed day. Treasury moved up about 10 basis points, Treasury yields on the 10-year, and that was the most since 2013. Beyond that, we saw the VIX go up 74%, which was its second largest spike ever. And then so we saw across the board stocks react to that. Because I think the most important thing to show is that obviously, with regard to valuations, roughly half of the S&P's gain this year has been because PE multiples have gone higher. So what does that mean? That means that the market in general is going to be very sensitive to moves and expectations, whether it be Fed cut expectations or inflation expectations. So that move in the Treasury bond yield, it's basically saying that the Treasury market is in charge here. And so that valuation gap being higher is going to be very sensitive to up moves and yields. And that's what we saw yesterday. And that's the main reason why stocks went down.
So tease out a little bit more why that 10-year Treasury yield is a risk for markets, and what else do you see as a risk for markets?
So the biggest risk, the reason why I see the Treasury yield going higher as a major risk for markets is pretty simple. So again, a big portion of the S&P's gain has been the valuation gain, and a lot of that has to do with, and if you think about all the excitement in the market that came post-election, the first 2 weeks post-election, the markets went wild, basically. Stocks did really, really well. Even value stocks did well. Let me give you one example. Banks went up about 6% in the 2 weeks after the election. But since everything changed, and the main reason is because inflation expectations changed. They went up a little more, and Fed cut expectations changed. So all these expectations of a nice, easy market, higher liquidity, all kind of stopped all at once. And that's what we saw yesterday. So now, if you look at it, there's been a big transition over the last week or so. Again, mainly going back to these higher inflation expectations. And we saw value stocks go back to their old ways of losing the growth stocks. We saw banks that were up initially about 6% post-election in the 2 weeks after. They're down about 12% now from a few weeks ago. And so again, I think the market is just at a very sensitive point. It wants liquidity, it wants low interest rates, and right now we're just not getting that.
You talk about growth stocks taking charge again. Let's look at Micron Technology, though. Those shares are down big today, despite the fact that it said its AI related chips, sales of those actually grew. So, what happened there?
Micron in particular is an interesting case because it kind of shows all the flavors of the market today. What it showed was that in certain areas, it's really, really strong. Its AI chips did really, really well, and they kind of fulfilled that growth promise there. But on the flip side, if you look at the products that they sell to phone companies and to the auto industry, it's both really slow. And we've seen that anecdotally from other companies as well. So the whole picture on a net basis, Micron lowered their sales guidance by a decent amount. It went from roughly 9 billion in terms of next year's expectation to the high sevens to $8 billion level, which is still pretty good. But again, the market just wants growth and it wants a positive story throughout. And our economy right now is not a consistently positive story. There are pockets of value, there are pockets of growth, but there are also some pockets of disappointment. And again, Micron's earnings pretty much showed that across the board.
So, as a value stocks guy, where are you seeing pockets of value?
I think the biggest area where we are seeing value is in certain, if you think about convertible bonds, look pretty cheap here relative to some other things. If you think about in terms of the stock market, there are huge gaps in valuations. Obviously, we talk about value versus growth all the time. And at a sector level, we are seeing that. Healthcare stocks, for example, are at historic lows relative to the S&P. Material stocks relative to the S&P are going down a lot. So on a sector level basis, there is value. The only thing is, though, and this is very important, each of these companies that you select here, they need to have some kind of growth potential to them. Otherwise, their PE will just stay down. And I think that was the trick for value investors, especially last year. If you just focus on the traditional value stocks and value sectors, you really didn't do so well because there was no growth. The growth was so concentrated. But if you look at small caps, maybe individual small caps, you can find some really nice growth stories to go along with low PEs. that traditionally has been an ideal place and a really good place to find
A
value.
spending bill backed by Donald Trump failed in the U.S. House of Representatives on Thursday, with dozens of Republicans defying the president-elect and voting it down. Trump had pressured lawmakers to tie up loose ends before he takes office on January 20th. Without it, the government faces a shutdown at midnight on Friday. But members of the party's right flank refused to support a package that would increase spending and clear the way for a plan that would add trillions more to the federal government's $36 trillion in debt. Chip Roy, one of 38 Republicans who voted against the bill, said he was, quote, sickened by the party that campaigns on fiscal responsibility. If lawmakers fail to extend the Friday deadline, the government would begin a partial shutdown that would cut off paychecks for more than 2 million federal workers, as well as disrupt a wide range of services in the days leading up to the Christmas holiday. A prior bipartisan deal was scuttled after Trump and his billionaire ally Elon Musk blasted it on Wednesday as a wasteful giveaway to Democrats. The bill that failed on Thursday largely resembled the earlier version. However, Republicans dropped some elements, including a pay raise for lawmakers. At Trump's urging, the new version also would have suspended limits on the national debt for 2 years. That would make it easier for Trump to pass the dramatic tax cuts he has promised.
Bank of England policymakers split over whether to cut interest rates on Thursday. More officials than expected wanted to lower borrowing costs despite lingering inflation pressure. The Bank of England kept its benchmark bank rate on hold at 4.75% as widely expected. But 3 out of 9 of the bank's key decision makers, known as the Monetary Policy Committee, voted for a cut to 4.5%. Economists polled by Reuters had expected only one member to vote for a cut. Governor Andrew Bailey said the central bank needed to stick to its existing gradual approach to cutting rates. He warned there was heightened uncertainty in the economy and they couldn't commit to when or by how much they will cut rates in the coming year. Financial markets have scaled back their expectations for cuts next year sharply due to faster than expected wage growth. They project only up to 2 cuts. Thursday's decision comes a day after it was announced British consumer price inflation rose to 2.6% in November. That was the highest in the group of 7 rich economies by a small margin. The central bank further said headline inflation is expected to continue to rise slightly in the near term. Reports of talks between Nissan and Honda to form an alliance took another turn Thursday. Taiwan's central news agency reported Foxconn has shown interest in a potential stake purchase in Nissan from Renault. They said Jun Seki, an executive from the contract manufacturer, is in France for talks with Renault officials. Seki is a former Nissan high-up who now leads Foxconn's electric vehicle business, while Renault is Nissan's biggest shareholder. A source told Reuters Foxconn is in talks with Renault to buy at least some of the French firm's holding in Nissan. They further said Seki is in France for these talks. Foxconn had no immediate comment on the report. Renault could not be immediately reached for comment, while Nissan declined to speak on the matter. The move by Foxconn comes as Nissan is holding talks with its longtime Japanese rival Honda. It aims to deepen cooperation, including a potential merger, and comes amid deepening financial and strategic trouble for Nissan.
Shares of Darden restaurants soared as much as 18% on Thursday after the company raised its annual sales forecast as holiday diners flocked to its popular restaurants, including Olive Garden, despite higher prices. Same-store sales at Olive Garden rose 2% after 3 straight quarters of decline. And sales at the company's Longhorn Steakhouse chain rose 7.5%. Higher menu prices combined with steady foot traffic have helped Darden maintain profits even in the face of rising costs, which include elevated meat prices and higher worker wages. Rival chains such as Shake Shack and Chipotle have also grown in popularity as escalating fast food prices have narrowed the cost gap with casual dining restaurants. Easing inflation has also prompted middle and higher income consumers to dine out more. For the full year, Darden expects sales of more than $12 billion, topping its previous estimate.